markets. This is Gersha from Technical Option Traders. Hope you guys are having a great day. So let's have a look. So big thing and big news today was the CPI data. It was hot year over year, month over year. It declined. So market tried to bounce on that news on the 5-minute on the S&P 500, as you guys can see right here. But it was no go. Sellers came in control and were able to push that price down. So looking at the S&P 500, we can see this price action is starting to get a little bit frothy, and it's getting a little bit, too much one-sided here on the selling, right? So when everything gets too one-sided here, I like to wait for a pullback of some sort or some sort of price consolidation. A big level was on SPY was right here, 443. We're below that now. We're back into this area, which I call the volatility area. Okay, so this is right here where we have heavy and aggressive swings, right? So we want to avoid this area at all costs in the next coming weeks because we can get some violent swings to the downside. Overall, if we look at the week so far, the week does not look so bad. The week still looks like it's got some nice room to go to the downside or the upside, but this wave is just consolidating between 462 and this point here, 416. This is a big consolidation zone that has been accepted by the S&P 500 for some time now. So because the price is not able to go higher, but we have to relatively look at it, it's not making new lows as well. However, the MACD is turning over on the S&P 500 on the daily. If we just look at it, so there is a crossover. It is getting a little bit overextended. The momentum is starting to increase to the downside. That's something we want to focus on and pay attention to. As we can see, the last few days, there's been more sellers than buyers. Okay, so this is something to concentrate on, that which way the price action wants us to go. And the EMAs are also getting converted to the downside here. They're getting very, very tight. So we want to see tomorrow, and this week is OPEX as well. It's a short week, so we want to see what really happens in the market. So far the S&P 500 looks like it wants to come down. Looking at the triple Qs here, the triple Qs, like I said before, huge gap downs. This was the area of demand. It's below it. Price is relatively below it as well, away from the EMAs. It's starting to work its way down. Tech is looking very, very vulnerable right now. This is a level to watch for the triple Qs, the 334 level, and it looks like it wants to head lower here, right? So looking at this level, I wouldn't be too bullish on the triple Qs right now. Even looking at the weekly time frame, right? So we're still below this. We'll see. We got 2 more days to go in this week here, and we want to see where price closes and how the selling momentum, does it pick up or does it decrease, and we get some buyers stepping in towards the end of the week. We do need buyers here. We do need bulls to hold at 333, 334 level here. If it doesn't hold, we are going to go much, much lower. This is going to be, if this goes to test 317, that will be the 3rd test here. So this is pretty aggressive. This is looking like double tops on the weekly. We'll have to keep an eye on triple Qs with earnings coming out this week as well. Looking at Dow Jones on the daily looks okay here. Just consolidating, very tight price action here on the Dow. We want to see if it can start to sell off here. MACD is signaling a sell. Something to focus on, the volume. The volume's been picking up on the sell side as well. Financials start off their earnings tomorrow, so that could really impact the Dow. All right, so something to keep an eye on. Financials as well as airlines. They're going to start off their earnings seasons tomorrow. So those earnings are something to pay attention to. So IWM, before we go into gold, IWM has been forming this bear flag for some time now. Okay, it's tried to break up, now it's consolidating here. I want to see a breakdown, retest of this flag at 198, and then a complete breakdown to about 170. So IWM looks very, very bearish to me. Don't see a reason to go long here. This is just a price consolidation, but I need 187 to break and close below that before we see anything else on IWM. So if we look at the weekly time frame, right, so it looks like we could possibly be heading to test the 173 level. We'll see how this works out. So this bear flag is forming on the weekly and the daily as well, which is just adding on to the selling pressure. So if we look at the VIX here, the VIX on the daily, this inverted head and shoulder pattern is looking to, keep holding its weight, right? So it's looking to get above the 26 and looking to bounce up here to about 32. And this can continue to fly with the market the way it is, and it's not able to go up higher. This is adding pressure, right? So with the CPI data coming in hot, all eyes are on earnings and the FMOC meeting, which is going to add volatility over the next few weeks. It will be very, very tricky to trade over the next few weeks if you're not careful. Looking at gold here, gold holding the 175 level, which I've been mentioning a lot. Even yesterday was a red day, but it was a higher red day. Today is another red day, so we had more selling, so profit taking going on, but gold is still inching higher here, with selling volume, which is interesting. The volume is picking up over the last 2 days, but the prices continue to close higher. So something to pay attention to. Maybe we're losing. I was thinking that we're possibly losing, but it looks like gold is building momentum here. So, but the volume today was a big sell volume on a small body range. MACD signaling an up move here. RSI is turning up, and you can see the volume, the momentum rising in gold. So keep an eye on gold. If it does break out above 186, target will be 194. So gold can do really, really well here. KWEB just in consolidation, coming to test this lower 27 level. If this breaks, we got a gap down to the low side around 23 and 22. So China looks very, very vulnerable here, guys. All right, so this is the market sentiment for today, as well as if you guys see here, right, the biggest sectors that we had going on was the consumer discretionaries, oil and gas, energy, and commodities. These are all defensive sectors. Okay, so if defensive sectors continue to lead in the market, the chances are the market has other areas that it needs to work on. Defenses, if money is in defense, you will start to see that the market will start to turn worse, and there will be low liquidity. So there's not a lot of money flowing in reopening stocks, not a lot of money going in technology. So something to be careful of. Trade very lightly. Setups are not there right now.